One. Is your diploma in accounting. Most of the learning providers do this chapter as your last qualification. You may have done already the FAPR unit, and then you also have the maths unit, then you have the business environment, and this should be usually the last one. But it's also very important a module. In case you want to get AAT qualified bookkeeper status, you need to have both the FAPS unit and then this TPFB units. The financial accounting unit and the tax unit are important for you to have the AAT qualification. And this exam used to be one of the very easiest one. It still is easier, but then again, it's about how you apply your knowledge in accounting and how to look through the references. And I've said so many times before as well, this exam you may be able to pass, not like score really good marks, but pass just by be able to interpret the reference material you will find in your exam screen once you started it. So let me just without further ado, let's start this exam. This exam is for 1 hour 30 minutes, and if you notice now, it got 8 tasks, and then it also has 80 total marks, and this means you have to get a prorated amount of 56 marks to achieve the 70% pass score. So we target 56 marks, but always is best to have some sort of a breathing space in this scenario. We call, just a little bit of a margin of safety. The margin of safety you have learned on your maths unit, you can use it in your exams as well. So let's start. Now, if you notice, the reference material is available on this side here, which you'll be able to go through. Most of the things it's related to your questions is there. Okay, so here the first question is, VAT registered trader sold an item to a VAT registered retailer for £1,500 plus VAT of 300. The retailer sold the item for 2,300 plus the VAT of £460 to a non-VAT registered business. The VAT registered trader who sold the item for 1,500 plus VAT will include which amount of the particular drop down menu there. I'm not sure you can see all the answers on your drop down menu, but I'll interpret it for you. It says 0, £160, £300 and £460 as a cost to its business. When you notice about VAT, the important part of VAT you need to know is it is the tax on the end user. So that means the end user will absorb the cost of VAT as a value added tax. Any intermediaries, it is not down to them as a cost, because anything they have paid, they can claim back. Anything they have collected, they have to pay to HMRC. So it is not a cost to the business, because if I sell something for £100 plus VAT of £120, the £20 is something I'm collecting from my buyer to give it to HMRC. Same as if I'm a seller, if I'm a buyer, I'm buying something for £100 plus VAT. The cost for me is only £100. The £20 we have paid, we can claim it back. So therefore, in this scenario, this will not be any amount. It's no cost to you whatsoever when it comes to the form of VAT. The VAT registered trader who purchased the item for £1,500 plus VAT and sold the goods for £2,300 plus VAT will include VAT of how much as the cost of business. It has the same number of answers there: 0, 160, 300 and 460. It is still 0 for them. They are buying and selling. The difference between the input tax and output tax they have to pay to HMRC. It is not a cost to its business. But the last one, a non-VAT registered business, straight away if it's non-VAT registered, they can claim it back anyway. They cannot claim it back. But if they use it for their own purposes, of course, it's going to be a tax deductible. But then here, the purchase the goods for £2,300 plus VAT will include how much? £460 as a cost to its business. Why? They have to absorb all of that VAT because they're not VAT registered. It is a cost to their business. Okay. Next one. Identify which one of the following businesses may register voluntarily for VAT. So if you notice that a business provides taxable services with an annual turnover of £105,000. But if you notice that here registration limit, so if you notice that in this part, the threshold is £85,000. So they have a compulsory registration for them. So they are not the answer. A business making wholly zero rated supplies with an annual turnover of £78,000. They can in fact voluntarily register because they have not reached the threshold of £85,000, but they are below that. By registering for VAT, they have a really good opportunity to claim any input tax they paid toward their purchases, because why? They're only selling zero rated supplies, so they're probably good. But this one here, the business making mixture of standard and zero rated supplies, the annual turnover of standard rated supplies 65k and zero rated is 30k, so it's £95,000. But you have to remember, they're still taxable. All of them are taxable, but only 65k is a standard rate. The zero rated are 30k. Altogether is 95k, which is above the registration threshold. The answer is going to be the second one. So let me get rid of this. Now third one. A Limited has been operating a cash accounting scheme for several years. B is a limited cost business registered for VAT 3 months ago under flat rate scheme. And C has been operating on the flat rate scheme for 3 years and not a limited cost business. True or false question. I love it, since true or false questions, people think, oh yeah, I got a 50-50 chance now. Trying to keep as much as chance as possible by reading the reference. So here, A Limited does not pay VAT to HMRC until the money has been received from its customers. That is the true nature of the cash accounting. So if you go here, the cash accounting is something we call, the VAT is only accounted for when the money involved in the transaction is realized in the business, like your purchases or your sales. Okay, it does not matter when you pay or receive, only when you are getting the money for it or when you're paying the money for certain things, you account for VAT. So that is true. So then first statement, in fact, is true. Then they're saying here, B Limited pays VAT on its gross turnover at a rate of 19%. So if you notice that here, B is a limited cost business registered for VAT 3 months ago under flat rate scheme. So if you notice that here on the flat rate scheme, the limited turnover business, limited cost business, they pay 16.5%, not 19.5%. So therefore that is incorrect. Now third one, C has bought one equipment for which includes £500 of VAT at the standard rate, and it can recover the input VAT paid. Now if you notice that here, they are not a limited cost business, they're using flat rate scheme. So if you notice that here on the flat rate scheme, capital expenditure input tax can be recovered on individual large capital purchases up to £2,000. Yeah, so input tax up to £2,000 can be recovered. So here it's under £500, so that is correct. Now look at the last one. B and C are currently entitled to 1% flat rate discount. If you notice that here, flat rate discount only in the first year you will be able to get a 1% additional discount. So here company B will get 1 year, they are qualified for it, but this one is running for 3 years, they are not qualified for the flat rate discount. This is rather, question. I just looked at that special accounting scheme reference material. I was able to answer it without any problem at all. All you needed to look for it and interpret it accordingly. Now, if you notice that now the next one is Daisy Property PLC has been operating annual accounting scheme for several years. The taxable turnover for the next financial year, 31st of March 2024, is showing in the following table. So if you notice that now they're talking about all the taxable turnover and the cumulative taxable turnover. They're asking you here, identify the date the Daisy Properties must withdraw from the annual accounting scheme. So if you notice that here, according to the annual accounting scheme, if you want to leaving the scheme, compulsory if the taxable turnover at the end of the VAT accounting period of accounting year exceeds the threshold of 1.6 million. So if you notice that here, this is the last day, okay? So this is the day we have to leave, okay? So in that case, 31st of March 2024 is the time you have to leave, because that is the last the month of the tax year, and it says taxable turnover at the end of the VAT accounting year exceeds the threshold. So we have to leave that scheme on that last month. Okay, you don't leave that here. Some people are thinking, oh, okay, no, December they have exceeded. Okay, we leave it December. No, you wait until end of the year, because if you're in the annual accounting scheme, the calculations are done on a specific way, you see. So if you leave in the middle, it's a bit too complicated to calculate the VAT liability accordingly. So therefore, it's easier. You leave it until end of the tax year. Now press answer. Now move on. Now next one is TAS Limited is a VAT registered, and sell. It is VAT registered and sell mixture of standard, reduced rates and zero rate supplies. So sometimes you get this reduced rate thrown in here and there. In this exam I have seen that thrown in few times. So be ready for it. Currently the reduced rate is 5%. Okay, 5% is the reduced rate. Complete the table below. Table to show the VAT amount and the net amount for the following supplies. Round your answers to the nearest penny, so 2 decimal places. So if I want to find what is the VAT on 420 pounds on VAT, so what I'm going to do, let me bring my calculator up. So on the calculator now. So on the calculator, 420 pounds divide by 6. 70 pounds is your VAT here, so 70.00, and then the standard supply rate is going to be 350 pounds. It's just times it by 5. But here, when it comes to the reduced rate supplies, you have the same amount, 420 pounds, but instead of dividing by 6, you divide it by 21, or put it this way, 105 multiplied by 5. That's another way as well, because the rate is 5%. Remember, if its VAT is 20%, you divide by 120 multiply by 20. Thus, you divide by just 6. In this scenario, divide by 105 multiply by 5. That should give you 20 pounds VAT. So here, the VAT is 20 pounds. And then the net is going to be 400 pounds. So if I'm going to show you simply again, for 400 pounds, what is the 5%? So if I'm going to say 5% is equal to 20 pounds, it makes more sense to you now. Okay, so it's very important you use the decimal marks. You see 4 marks there, you will get 0 if you didn't do decimal. TAS Limited offer a customer prompt payment discount if payment is received within 7 days. The customer is not VAT registered. So identify the effect on VAT of the customer taking advantage of the prompt payment discount. Okay, so for you, it's what matters, not for the customers, because when they're taking prompt payment discount, you have to give them a credit note. That credit note basically reduces the value of your invoice. Your invoice has output tax because you have collected VAT from them, so you have to pay it HMRC. But when you give credit note, you claim that some of the VAT back. So therefore, VAT will decrease. Okay, the VAT will decrease because you're taking less money from your customer because he's taking a prompt payment discount. TAS Limited made the following sale on 23rd of May 2023. Standard rate goods £120 plus VAT and VAT £24. Zero rated goods for £96. The customer has requested an invoice from TAS Limited. TAS Limited issues a simplified invoice to the customer. Let's look at the invoices. Here, if I've noticed that there is a way they show you the type of invoices. So therefore, let me find of it. Okay, here you go. Simplified invoice. If your total invoice value is less than £250, which is correct because it's definitely less than £250 if you add all of that together. Excuse me. It's going to be £240. So if it's less than 250, of course I can submit them. But what are the things we need on that invoice? It needs to have the individual rated goods total value of it. You don't have to specifically show the amount of VAT. So in this scenario, £96 has to be shown there, and so as this £144. It says here, each applicable VAT rate, the total amount payable including VAT and the VAT rate. It does not have to show you the amount of VAT. It doesn't say there anywhere about the amount of VAT. So these are the two amounts has to be shown, £144 and £96. Then saying here, identify when TAS Limited must issue an invoice to the customers. If you notice that here, invoice has to be issued by a certain number of days. How many days? If you remember it, if I'm going to say here, can I find it? If it's here, can't have VAT invoice. It has to be issued by a certain amount of days. Does it show there? I don't know. No, it's not here. There you go. Time limits of issuing a VAT invoice within 30 days of tax point. Okay, so it has to be 30 days. I know that, but I want to show you in this reference material how to look for those kind of quirky things. Okay, now it's all done. Now we answered everything here. Let's move on to the next question. Let's close the reference. You don't need it now. Residual input tax is input tax occurred on purchases and expenses relating to both taxable and exempt supplies or taxable supplies only. It is taxable supplies only. Residual input tax. Okay. Oh, that means it's for everything. Okay. The residual input tax is an input tax occurred on purchases and expenses related to both taxable and exempt supplies. That means I may sell taxable and exempt supplies, but I will be able to say there is an input tax on when I bought the goods originally, because I may modify that and sell that as an exempt supply or a taxable supply. It does not matter, but the residual input tax is related to both of both taxable and exempt supplies. Okay. If a partially exempt VAT business exceeds the de minimis limit, the business can recover only a restricted amount of input tax, all input tax, or no input tax. It's a restricted amount. If you notice that here in this scenario, they have said to you about the de minimis point. Here you go. Partial exemption. So if your de minimis amount is £625, if it's anything less than that for your exempt supplies, you'll be able to reclaim all of it. Okay, a partially exempt business cannot reclaim the input tax paid on purchases that's related to the exempt supplies. If the amount of input tax incurred related to the exempt supplies is below a de minimis amount, which is £625 per month, input tax can be claimed in full. So if the amount of input tax related to the exempt supplies above the de minimis point, only the part of the input tax can be related to non-exempt supplies can be claim. So here, if in this scenario, a restricted amount of input tax as per that reference material. Now let's look at the next one. High Life Limited is a VAT registered business and has incurred the expenditure including VAT at standard rate. Let me get rid of the calculator. It's showing up on the screen now. Okay. Identify whether the High Life Limited can recover the input tax or the input tax is blocked for each expenditure incurred. So reference material again, we can look at that about VAT, how you can claim the VAT back. Okay, so let me say here where it is, blocked expenses and VAT. So this is the place we have to look for. Okay, so now it says here, hospitality provided to an overseas customer from Italy. So here the exception is that input tax can be reclaimed on the respect of entertaining overseas customers, but not UK or Isle of Man customers. So we can recover input tax for providing hospitality to an overseas customer from Italy. A lunch provided to a former employee, it's not covered. Why? It has to be your current employees. It says here, entertainment in respect to the mixed group of both employees and non-employees, customer and suppliers. The business can only reclaim VAT on the portion of expenses that is for employees and portion of for overseas customers. They cannot do for a former employee because they not meet that threshold. An evening meal provided to an employee, yes, you can reclaim input tax on that. Attending a sporting event with a client from UK, they're blocked from claiming from anybody within the UK, not UK or Isle of Man customers. So the client from UK, tough, we can't claim for them. Let's get rid of the reference again. Let's go back, the last part. The accountant of High Life Limited has carried out a review of aged receivables at the end of financial year to 31st of March 2024 and identify some bad debts. High Life Limited does not operate any special VAT schemes. All supplies are standard rated. Payment terms are 2 months after invoice date. So 60 days almost, so 61 days in certain scenarios, maybe 62 days. For each bad debt, identify whether they are eligible for bad debt relief or not eligible for bad debt relief. Calculate the amount of bad debt relief available. Round down the figure to the nearest penny. If your answer is 0, enter 00. Purple Limited has the total debt of £5,598. All of which are over 6 months old. A bad debt provision, remember, a bad debt provision has been made. So when I come to provision, what is the meaning of provision? It is your allowance for doubtful debt. Remember from your the advanced bookkeeping unit, you have remembered you can set off a possible bad debt as something called allowance for doubtful debt. It's a liability you keep in your books. Okay, it goes on net of your trade receivable, but they possibly can pay that. Even though the debt is more than 6 months old, it is not still written off. They only made a provision for it. They expect they might get paid or not paid. So they are not eligible for bad debt relief. So the answer is for this one is 00. If you notice that here, bad debt relief, if you notice that about bad debts, that says the debt has to be more than 6 months old and less than 4.5 years old. The debt has been written off in the VAT account. It's not been written off. They made only a provision. Provision is not writing off. Okay. It's not been sold or handed to a factoring company. The business did not charge more than the normal selling price for the item. That means they didn't inflate the selling price. Okay. In this scenario, this particular account, it's not eligible for relief on your bad debt. Pink Limited disputed an invoice totaling 498 that invoiced in June 2023. The amount has been written off in the VAT account. So here the invoice totaling is 498. So the VAT for that one, 498 divided by 6, it's 83 quid. I can claim the 83 pounds VAT on this invoice. Okay, I put 2 decimals. Notice that it says the nearest penny. Do not forget this. High Life Limited received an invoice from supplier totaling at £1,200, including VAT at standard rates. The supplier offered High Life Limited a 3% prompt payment discount if the payment was received within 7 days. They took advantage of the prompt payment discount. Calculate the amount of the amount they can recover as an input tax. Round down to nearest penny. So let me bring the calculator back up again. On the calculator, I'm going to show you how much is the amount. So here, £1,200 including VAT. That's the total. That is the total invoice value. So let's find out how much is the prompt payment discount. So we're going to multiply this by 3%. 1,200 multiplied by 3%, £36. But if you notice, this is whole of the discount. But I need to find out what is the 97% now. Okay, so if I'm going to take away 1,200 multiplied by 97%, which is the actual amount we paid, divide by 6, the VAT we can claim back now is £194. This is my recovered input tax. Okay, the £6 prompt payment discount, VAT, that is going to be paid back to HMRC. So originally it was £200, but now we only paying, we're claiming £194 because that is what we paid to our supplier. Now save and move on to the next one. Task number 4. It's about preparing and calculating adjusting information for VAT returns. Alright, now here, Jazz is an accounting technician who works for a firm of accountants. Jazz is working on VAT return for Salt Design Company Limited for quarter ended on 30th of September 2023. Salt Limited uses cash accounting scheme. Remember this, don't forget that. Cash accounting scheme, and VAT return is completed using software package. Jazz has entered a payment to a supplier totaling $529.20, including VAT at standard rate as indicated on the invoice. The software calculated the VAT at £88.20, whereas the supporting invoice shows the VAT of £25.20. So what is the reason? They're asking you here. The invoice is not correct, of course, because they have included the wrong VAT. If I'm going to calculate it again, let me see here. 529.20 divided by 6 is £88.20. That's how much I should have had. But instead of that, I have £25.20. So why is that? Let's see here. 529.20 divided by 21. I'm getting £25.20, which is the reduced rate, because the VAT included was done under the reduced rate of 5%. So that one is incorrect. So we need to make sure that is amended and updated accordingly, or we ask the the customer to sort that out. So let's have a look at it. Change the figure on the software to agreed with the invoice. No, we can't do that. Contact Sole Design, ask them to investigate with the suppliers. Of course, that's what you should do. Use the figure on the accounting software and take no further action. No. Why? When it comes to reconciling later on, you cannot claim the VAT back on it. So supplier has to supply with the correct amount of VAT as per the invoice. The invoice says 20%, and if they put the reduced amount, it has to be sorted accordingly. Now, next one. There's a big question anyway. So let's see. Sole Design Limited invoiced a customer for £1,500 plus VAT at standard rate on 1st of August 2023. The customer paid for half of the invoice on 15th, remainder is still outstanding on 30th of September. Calculate the amount of output tax relating to the above transaction that will be included in the VAT return for Sole Design Limited for the quarter ended on 30th of September. So if you notice that here, they're doing cash accounting scheme. So if they're doing cash accounting scheme, so the total invoice value was, let me bring the calculator back up again. Yeah, the total invoice value is 1,500 pounds, divide, multiply by 1.2, which is 1,800. They paid only half of it, which is 900 pounds. Divided by 2 is 900 pounds. What is the VAT on 900 pounds? So I'm going to divide by 650 pounds. So that is the only VAT amount, output tax, I'm going to be including in my VAT return. Cannot do the whole of 300 pounds. Why? According to your cash accounting, only you account for what they have paid you, okay? Not the whole of the invoice amount. Next one. Jazz has noticed the bank reconciliation for the Sole Company Limited has not been completed from the previous quarter, 30th of June 2023. He has identified 4 transactions that needs to be posted in the accounting software. Calculate the changes that need to be made to the figures for the input tax and output tax for each transaction. Round down your answers to the nearest penny. That means it's all in decimals. And there are if there is no changes, enter 0.00. Ensure you enter a figure on every box. Do not leave any blank cells. It's 4 marks. So you have to do 2 boxes to get 1 mark. Okay. So if you miss one, you get 0 mark. Okay. So if you miss one, you get 0 marks for this, 0 marks for this. So you'll end up having 0 altogether if you just only enter 1 box. So here, 3rd of April, payment to a supplier of £90.24. The supporting document shows the VAT at standard rate. So here, a payment to a supplier total at £90.24. But remember, guys, is that the same company, Sole Design? And what does a Sole Design does? They do cash accounting. Cash accounting means you only account for tax when you pay or receive money. Okay, when you pay to your supplier and you receive money from your supplier. So when you make a payment of £90.24, so get the calculator out, £90.24 divide by 6 is £15.04 input tax I can claim because it's a payment. No output tax at all. So we have to put 00 there. Amount paid to HMRC for VAT for the quarter ended on £3,868.71. Do I have to change my input tax, output tax for that? No. This is just a payment to HMRC. We are not charging or collecting VAT to our customers or suppliers, is it? So that is nothing to do with that one. So it's going to be 0 and 0 here. Proceeds from sale of a computer of £300. Sole Design Company has claimed the input VAT on the original purchase. So if they claimed on the original purchase, the sale of computer now will be subject to VAT on its sale. So therefore, £50, that means 300 divided by 60, has to be paid as an output tax. So £50 here, 00 here. I hope that was right, but let me check it later on. If it's wrong, you will be getting less marks for this. A direct debit for the payment of electricity of £262.50. The supporting documentation shows 5% of VAT. So it is only input tax in this scenario, not output tax. So go to calculator again. 262.50 divided by 21 is £12.50 VAT. £12.50 VAT is claimed back on your input tax. Okay, so that should realistically give you 4 marks. End of task. Now let's go to task 5. This task is about verifying VAT returns. This task contains parts A to C. So they're saying here, Aggie's Market uses accounting software to calculate the VAT due to or from HMRC. No special schemes are used. The account assistant for Aggie's Limited is reviewing the VAT return for the quarter ended on 30th of November 2023 before passing it to the accountant for approval. Identify whether the following transaction should be included in the box 1, which is the VAT due on period on sales and other output, and VAT box number 4, the VAT reclaimed on period on purchases and other inputs, the VAT return to 30th of November 2023. So here, fuel scale charges. What is the fuel scale charges are going to be? The VAT on them, okay? If you notice, what is the fuel scale charge itself? You can reclaim all your fuel, expenses towards the car if you pay a fuel scale charge. So VAT on the fuel scale charge has to be paid via box 1 because it's like a sales invoice by you selling fuel to your employee. So if you notice that here on the reference material, you have fuel scale charge. They say here, all reclaim, or if the business pays road fuel, it can deal with the VAT charged on the fuel in 4 different ways. Reclaim all the VAT and pay the appropriate fuel scale charge below. This is the way of accounting for the output tax on the fuel that the business buys, but then it's then used for private motoring. So if you notice that here, this one will go as part of your expense, a fuel scale charge, and then that will obviously going to be added to your output tax. The VAT on bad debts is going to be your reclaim on your input tax because you're getting a relief. The VAT on cash sales is going to box 1 because it's your sales and outputs. And credit note issued to your customers, where is that going to go? It's going to reduce your output tax, isn't it? It won't go in your input tax because it's nothing to do with your purchases input. It is your sales, it's going to be reduced. Your sales liability means your output tax is going to be reduced there. The VAT on credit purchases, the credit note issued to your customers will be affecting box 1. Okay, it will reduce the amount on box 1. The accountant for Aggie's Market Limited did not carry out her reconciliation on the previous quarter VAT return as she was ill. She was off ill. The accountant has discovered 2 differences which have been incorrectly reported and submitted in the previous quarter's VAT return. A payment of HMRC for VAT totaling of £3,525 has been recorded as input tax. That means instead of payment of it, it's been accounted for as input tax. Okay, a sales invoice which includes a VAT of 7,370 has been recorded twice. So here, if I put a sales invoice the payment for HMRC for VAT as input tax, that is overstating your input tax by that amount. Your input tax is being overstated by that amount. Okay, so we have to reduce input tax. And then also, if you notice that here, the sales invoice, if the VAT of 7370 is been recorded twice, I have also overstated my output tax. So if here it is overstated and this is also overstated, because both scenarios I put too much input tax on this and too much output tax on that one. Okay, so they're asking here, calculate the value of the net difference from the previous quarter. That means I have overstated the output tax by that amount, overstated the input tax by that amount. So the difference between them is going to be in my calculator. Let's see, 7370 minus 3525.28. It is 3844.72. 3844.72. They're asking here, complete the following statement about the net differences. Net differences will decrease or increase the input tax or the output tax on the current quarter to the 30th of November. So what is that going to do? Because I have overstated my output tax too much than my input tax. So therefore, any correction of it, it has to go towards increasing my input tax. So it has to increase your input tax because the net difference is a VAT refund, because I have paid too much VAT. Here you go, this one is more than that. I have overstated the input tax, I have overstated the output tax, but this output tax I paid too much. Therefore, I can claim that back via increasing my input tax. Okay. The two differences identified by the accountant are classed as non-deliberate and careless error. Non-deliberate, careless errors. The box 6, the total value of sales of all the other input, excluding any VAT figures, Aggies Market Limited total £955,000. Identify the reporting threshold for separate reporting and non-deliberate errors for Aggies Market Limited. What is the threshold? So for that one, let's look at that here, errors on VAT return. So it says here the threshold is £10,000 or less, or up to 1%, maximum £500,000, so £50,000 for the total value of all the other output excluding any VAT. So if I'm going to look at that here, if it's 1% of that is £95,000, but it is the maximum 50,000, but the error is £10,000 or less. So the error totally is less than 10,000. So that is the threshold for that one, not 50,000, because up to maximum £50,000 means it has to be 5 million. Okay, so it's much less, whichever the lowest of. Identify the correct action that the accountant of Aggies Market Limited must take to report the errors below the threshold. In this scenario, if it's the value of the net VAT error discovered is above the threshold, it must declare to HMRC in writing separately. Okay, I don't have to do any more. I just have to correct the errors on the current VAT return form. I don't need to report to HMRC. I cannot amend the VAT return from the previous period. It's been already done. So I just have to correct them and submit to HMRC with a new VAT return. Okay, that's all it says here on the reference as well. So let's answer it and move on. Now task 6. Here, this task is about VAT rules that on the record keeping, filing and payment and repayment, including non-compliance implications. You are a trainee in an accounting practice. Up Textiles Limited, a client started to trade on 1st of August 2023 and registered for VAT on that date. Alps Textile Limited has not registered for any special accounting schemes. The first VAT return is for the period on 31st of October 2023. Select the due date of VAT return for the period of 31st of October 2023. It has to be 1 month and 7 days after the end of period. So if you notice that here, it says there when you have to submit. So here, if you notice that here, the VAT returns, it says here 1 month. Deadline for submitting is 1 month, 7 days after the end of that period. Deadline, if you pay by direct debit, HMRC will collect 3 working days after the submission deadline. Okay, so that is absolutely fine. So here, if it's 31st of October, 30th of November, and then 7th of December will be the deadline. Okay. The next one, directors of Alps Limited, Textile Limited, understand the certain business recorded should be retained according to HMRC rules. Identify which one of the following business record does not need to be retained by Alps Textiles Limited for VAT purposes. Correspondence from the bank about a personal loan to the director? I don't think so. Details of sales order from customers, yes, we need to keep it. Documents relating to the purchases of goods, yes, you have to keep it. Bank statements of the business, yes, of course we have to keep it. But personal loan to a director has nothing to do with the business. We don't have to keep it ourselves, okay? And there is no VAT implication on loan anyway, so it is not required at all. Identify to which year Alp Textile Limited need to keep their business record for the period ended on 31st October 2023. So if you notice that here, keeping records is 6 years. For 6 years of retention, it's going to be 2029. Okay, so 23 to 29 is 6 years. Identify the consequences of VAT taxes. Alp Textiles Limited, if the VAT records are not kept for the required time, a penalty will be issued, may be issued. Why? Because you got penalty to failure to keep. Okay, maybe, not always, but maybe. Then now next one. The directors of Alps Textile Limited decide to submit the VAT return for the period of 31st of October 2023 to save money. Well done. The return is submitted late and shows that VAT refund is due. Alp Textile Limited will receive 4 late submission penalty points. No, they get 1 penalty point per late submission. If you notice that here, it does not show that clearly. It says here, quarterly threshold. This is the threshold, means you have to have a compliance period. Every time you make a late payment, also late submission, you get 1 penalty point. So it is not 4 penalty points. So it is going to be false. Alps Textile Limited will not receive any late submission penalty points there because there is no VAT due. That is also wrong. It does not matter they have 0 or negative. They have to submit it on time. So they will not receive any submission late penalty point. That is wrong. Okay. Alps Limited will not receive any late submission penalty points because this is their first VAT return. That's correct. For their first VAT return, there is a bit of a leniency there. I think where it is. It doesn't have it here though, but as far as I know, if they make first submission late, I think there is just slap on the wrist. As far as I know, it does not show here, but that is the case. Now, another client is Bexley Limited, for whom you prepare a quarterly VAT return. Due to changing bank accounts, Bexley Limited have not made payments to HMRC for the last 2 quarters. That's a lot of fine they're going to impose now, because they haven't paid for 2 VAT quarters. That's 6 months. Definitely they're going to be a huge bill there, but I don't know. Let's see. As the direct debit has been cancelled. Today the date is 22nd of December. They're asking you select the first and second late payment penalties that will apply to Bexley Limited for each of the following quarters, where the returns have been submitted on time, but the payments have been have not been made to date. All penalties have been calculated to the nearest pound. So they have given you here the first VAT return, 30th of June 2023. The total VAT due was £5,100. It is overdue by 137 days. Okay, now if you notice that the answers are for the first penalty is £102, £200 and £204. The second penalty is £60, £204, £400 and 0. Similar answers on both. £54 on the second one, £54, £108 and £200 and £4, £108 and £400. They are the answers they've given us. But let's work it out, because on your reference you have how to calculate the penalties for late payment. Okay, so here they have said to you how they will charge. It says here how much they charge. The first late penalty and the second late penalty, because the second late penalty only applied after 30 days. So anything after 30 days, there is a second penalty. The first penalty don't apply to you if you're up to 15 days. 16 to 30 days is the 2% of the VAT outstanding on the day 15. And then if you have 31 days or more, you pay the 2% of the VAT outstanding on day 15 and 2% of VAT outstanding on 30 days. That means it's 4%. Okay. And the next one is a daily rate based on 4% per annum charged every day from day 31 until paid in full. So if you notice that here, it has to be calculated in a sophisticated way. So let's work this out together. See if I can go to calculator there. Yeah, I think I have my calculator on the screen. Let's work it out. It's only 4 marks for this, but it is a bit of a complicated calculation. So now let's work out what is the first penalty going to be. £5,100 multiplied by 4%. Why? They have exceeded the 31 days is above there. So the total VAT we're going to pay £5,100. 4% of that multiplied by 4% is going to be £204. So it is £204 on the first late penalty. And the second late penalty is going to be 4% after 31 days. So how many days is overdue by? So 137 minus 31 is going to be what? 106 days. So here the daily rate 4% per annum charged each day for okay, so the total VAT we have let's calculate it. Let's see. $5,100 multiplied by 4% per annum. This is the amount we charge per annum. Yeah, for the whole year, 4% per annum. Okay, so we charge for the year. Multiply by how many days? 106 days. 106 days. Divide by 365. So that gives you about £60. So do I have a £60 here? Yes, I have a £60 there. That is the second penalty. Okay, and the second one here, £45 days. So it's going to be £2,700. Again, we have to pay 4%. So let's do here 4%. It's £108. So they have to pay £108 of first penalty. The second penalty is going to be smaller because it's only by 14 days. So again, 2,700, 4%. £108 multiply by 14 days. 14 days divide by 365. So it's going to give you £4 14 pence. There is a £4 answer there as well. So the second penalty is going to be £4. So totally they're going to pay about what? £204 plus £108 plus £64. It's going to be £376 of penalty alone on top of the VAT due there. Okay, so that's the calculation for that one, and then let's submit that one. Now next one, match the definition below with the correct term. The total earnings of an employee for the period after tax-free deductions. That is going to be your taxable gross pay. The answers are gross pay, net pay, pay rate, taxable gross pay. Because if you take away tax-free deduction like your national insurance contributions, not national insurance contributions, so your pension contributions and some other tax-free deductions, and they will be called taxable gross pay. The total earnings of an employee for a pay period. So the total pay for the pay period is going to be called gross pay. The amount earned by the employee per hour is going to be the pay rate. The amount that an employee receives in their bank account for the pay period after all the deductions made is going to be a net pay. That's your net. What's what you take home with. Next one. Identify whether the following statements about registering an employer are true or false. Only businesses are required to register as employers, not individuals. That's incorrect. The word only simply suggests is wrong. Why? An individual can be registered as employer as well. A registration as an employee cannot be more than 2 months before the employees are first paid. Yeah? Let's see here. It says there, payroll deadlines. You must register before the first payday. You cannot register more than 2 months before you start paying your employee. So here, you cannot register more than 2 months before. Yeah, that's absolutely fine. Okay. The next one here. Sunday's Bakery is a partnership and it employs one member of staff, Desi, who reduced his work hours from January 2024. Sunday's Bakery pays HMRC monthly and is entitled to the employment allowance. Below are some details from Desi's payslip for December 2023 and January 2024. So it has gross pay, tax, national insurance contribution from both sides, employees' pension contribution, employers' pension contributions, and the student loan. The employment allowance for Sunday's Bakery for 2023 is £199, and for January is £33.40. It's basically they're claiming their national insurance contribution back. Whatever they pay to HMRC from them side, they're claiming it back. So here they're asking you complete the table below to show the taxable gross pay and net pay for Desi, the amount payable to HMRC by Sunday's Bakery for 2023 and 2024. Enter all figures to 2 decimal places. Any amounts repayable to HMRC should be shown as either a negative amount using a minus sign. Okay, should be shown as a negative figure using a minus sign. So let's get this out of the way and get the calculator out and to work out the question. So I'm going to do this here instead of doing that one. I'm going to use this part for my reference so I can see all the calculation and amounts are there. Okay, and I have this answer bit right here. Okay, so I will not miss out on anything. Let's get the trusty calculator out here. Wait a minute, please. Let me go to OBS. Yeah, put the calculator here so you can see how I'm going to work out the numbers so it doesn't impede on the other answers. Okay, so now it's fine. Okay, now get the calculator for me first. Here, the first one is the gross pay. So they're asking you taxable gross pay for December. So if you notice that here, the gross pay is 20,200. Anything non-taxable is your pension contribution. So the £90 taken away from there. So it's 2,200 minus £90 is going to be 2,200 minus £90 equal to £2,110. So 2110.00. Make sure 2 decimal places. And then the net pay. How much is the net pay here? The net pay is all the employee contributions taken away from. Okay. So here, if you notice that here, the net pay is going to be minus the tax of £212.40 minus the employees' national insurance contribution of £138.24 minus, we already accounted for the pension contribution, the student loan 32 quid. So it is going to be 1727.36. And the amount payable to O from HMRC is, in this scenario, what I have to pay to HMRC is, again, this minus that. You would have worked this out now. Let me see here. £2,110 minus 1727.36. Okay, we keep this in mind. £382.64. Okay, I'll just keep it here. £382.64. Now let's work that out. What is the liability I have to pay to HMRC? 212.40 plus £138.24 plus £199 plus £32 student loan. You have 581.64, but you see you have an allowance for £199 employment allowance, so you take that away. I'm getting £382.64. That's the answer. This minus that should give you that answer. Magic. Now let's look at the taxable pay for January. So if I look at that here, £1,000, Desi still maintaining paying £90 pension contribution, so it's going to be £910. Okay, the net pay is going to be, if you notice that there is no employee contribution here, but there is a tax refund. There's no student loan. So the net pay is going to be £910 plus £27.60. It's going to be £937.60. So what is the amount payable to HMRC? By our previous calculation, this minus that give you the net amount paid to HMRC, but this is higher than that. So therefore, we do a refund from HMRC for the tax overpaid. So this one, we don't have to pay. If you notice, they also have a contribution of £90 to HMRC, but you can also deduct that one, the allowance for the, sorry, not £33.40. That national insurance contribution of £33.40 is claimed back as an employment allowance. So you have net amount to pay for HMRC is 0 or minus £27.60. So that is the answer for that one. Now let's look at the question number 8, the last one. We still have 30 minutes, which is absolutely nice. You are a trainee accountant for Dory & Co. Limited. Your responsibility is to prepare and submit VAT returns for numerous clients. So they're saying here, you prepare the VAT return for VC Dry Cleaners Limited for the quarter ended on 30th of June 2023. Extract from the accounting software show the following: output tax of £5,300, input tax of £302.92, total outputs of £26,500, total input £5,284. All previous VAT returns have been submitted and paid on time, so you don't have to worry about any implication from there. So here they're asking you to fill in the blanks. Please find the attached copy of the draft VAT return for the quarter ended on 30th of June 2023. The return must be submitted to HMRC by when? 30th of June means July, August, 7th of August. So we have just started to go here. August the 7th and 2023. They ask you to type the year in full. So we have done August the 7th, 2023. The total amount due to HMRC for the quarter is this minus that, isn't it? So it's going to be what? So let's get the calculator out again. Let me readjust the calculator here. Okay. Readjust the calculator now. Okay, the calculated amount is going to be 5,300 minus 308 pounds dot 92 pence, 499,108. So it's going to be 4991.08. That's the amount due to HMRC. If the VAT return is not submitted on time, you will be liable for what? A penalty of 200, a penalty of 400, 4 late submission points, or 1 late submission point. Is 1 late submission point from HMRC. All late payments of VAT are subject to payment interest and penalties, and late payment penalties. So for that one, let's see here. See, there is no I think it's interest. They'll charge the interest of 2.5. Okay, they will do the interest at 2.5%, but not a penalty. If you notice that here, some of the penalties you can get away. I think it's going to be just interest, not all the penalties. Please confirm that all the figures are correct, not just the figures for the output taxes or the input taxes. Here the answers are late payment interest and penalties. Late payment penalties is mostly the interest is the right answer. Okay, so let's choose that one. All figures are correct. And the last but the least, get rid of it. Yeah, we 1, 2, 3, 4, 5. 5 marks for this one. 1, 2, 3, 4, 5 marks. And the last one is identify when the VAT return for VC Dry Cleaners Limited can be submitted to HMRC. As soon as you prepare the return, once the authorization has been received from the directors of VC Dry Clean Limited, and once your manager has reviewed them. It has to be from the directors of the VC Dry Cleaners, because they are the one, the client has to give the authorization to go through submitting your VAT return. Not your manager will review it, of course, but he's the one not making the final call on it. You have established a flat rate scheme may be beneficial for VC dry cleaning system. The relevant flat rate is 12% and the business is not a limited cost business. Calculate the amount of VAT that would due if VC Dry Cleaners Limited were registered under the flat rate scheme. Ignore the 1% discount. Calculate the answers to the nearest penny. So if you notice that here, the total sales, the flat rate scheme calculate the VAT on the total revenue including VAT. So here 26,500 multiplied by 1.2, that is going to be 31,800 pounds, and multiply this. What is the rate they have said here? 12%. So here multiply this by 12%. Hold on. I think I calculated it incorrectly. That one, yeah. Yeah, that one multiply by 12%. It's going to be 3,816 pounds. This is the VAT they will be paying if they're using the flat rate scheme. So here 3816.00. Do not forget the penny again. If you drop the penny, you won't get in the pound there, put it that way. So there is a huge amount of difference here. It's about 1,000 something amount, 1,000, yeah, 1,000 something, 1,100 something. Identify what course of action you should take in your findings. Discuss the matter with your manager, line manager. Do nothing, as the client has the responsibility for changing schemes. No, it's not really. We are here to advise them what is best for them. Or request HMRC to change the scheme. We can't do that without your client approving it. So it has to be something you have to go with your manager and discuss with the manager. That means concluded all of that questions with plenty of time to spare. Submit the assessment now. Let's see how did I do. I hope I done fine. Voila. Perfect score, guys. Thank you. It's all about how you interpret this. It's not much of a knowledge I've just gathered here. I'm, pretty much chuffed. I managed to get good score by just looking at the reference alone. Most of the things I haven't updated myself because I'm not teaching level 3 this year. Basically I'll float around different levels, and sometimes I teach different levels in one particular calendar year or the academic year. So in this scenario, the last year when I taught level 3, and they had the old FA2020 option there, or 2021, I'm not sure which one it is. It changes so often. This year VAT has been updated, and therefore Financial Act 2023 has been implemented now, and therefore the scope of the TPFB exam also slightly changed, but still we can do really good on these exams. So yeah, and I hope you enjoy this video. Be sure to like and subscribe to this, pass this message to your friends, and of course anyone is benefited by these videos, you can attest to it. It is simply about you performing well in your exams. You can do so much studies, you can do so much practices, but you have to have the right demeanor to face this kind of exams, because most of the time exam is what sets you out in a greater pathway, and hopefully you manage to get something out of it and complete your qualifications without any further hiccups, put it that way. And I'm certainly wish you the best, and my link is down there for the practice assessment 1. You'll be able to go and have a look at that as well. This is by far the hardest one compared to the first one, and I'm hoping to publish a little bit more videos on tax later on this year. Hopefully if it's something new comes up, I will be certainly adding to the contents. And yeah, thanks again guys, appreciate your patience with me, and of course I wish you the best, and have a pleasant evening, and take care. Bye bye.